Okay, here we are back at our live trade example, and as before, we were short the euro dollar US dollar. And let's take a look at where we are today. And this is the very next day. We're up 123 pips. So in this case, we're using a lot size of 0.1 rather than 1 in a standard account. In a standard account, this would be, or standard lot would be $1,237 basically. So 123 pips would be $1,230. That's how far we'd be ahead in this particular trade. Okay, so let's go down here. Take a look at modifying our order here. Now we can get out here, or we can stay in here. We have a couple of different choices. And again, this is an example trade. So I'd like for you to see an example of getting out of a trade at a profit. What we're going to do is I'm going to expand here so you can see the move that has been made from our short entry. Market did go up, move against us, came to our favor, came back up, and then proceeded downward from there. Okay, so here we go. Without further ado, let's get out of this trade. Modify, delete order. Okay, we're going to close this out. So put instant execution. I'm going to close the sell out. And more, the market's still moving down. So here we go. All right, that's it. Now, as you'll see, that trade's completely closed out. Let's go back over here. And this is something that you always check. There's no profit target line. There's no stop loss line. So there are no pending orders. That is a good thing. That's exactly what we want. The order here canceled out the stop loss, canceled out the take profit, and closed at 1.47134. This means our profit on this particular trade was $125 because we're using a 1/10 lot size, standard lot size, in a standard account that would have been 125 times $10 per pip, which would have been $1,250, which is fine. Now, there may be people out there thinking, well, why in the world didn't we go for that $1,250? And the reason is that going for that $1,250 would have required a larger than reasonable amount of risk. That would have required that rather than our stop be $233, that our stop up above this point here on this weekly chart would have been $2,330. That's almost 50% of our initial equity. And here we can see all the things here from our trade, the details. 120, a little bit over 125 pips. So we're happy with that. That's a very, very, very simplified example of a complete Forex trade. Now we're going to have more examples. Do not worry about that. Examples you can follow along with. You can place the same trades in your charts, which I would actually prefer that you do, so that you can see everything that's going on. Now, one additional thing that I'd like for you to do is to, on your chart, I've already done it here, is to create a monthly chart to add to our particular profile here. Okay, now I can close this chart and I'll show you how to create it on your own. Okay, we go up here, new chart. Okay, you see it's our standard chart there. We're going to go to templates, go to candlesticks 1, and there you go. And we go up here, hit the plus sign, make that a little bit bigger for us. You can see that's still hourly, so we go up here to monthly to complete a longer time frame, and there we have a nice beautiful monthly candlestick chart. Okay, so we can easily hide that behind the ones we look at more regularly, or we can go up here and say we're going to tile them horizontally, hourly and 4 hour, and daily, weekly, and monthly, which is fine. We can do it in this way, and each of these, of course, when we want to look at them, we can just go and look at them on a larger scale, no problem at all. So now this is what we're looking at. I wanted to include the larger time frame of monthly just to give us some additional perspective and really go top down. Monthly, weekly, daily, hourly, 4 hours, hourly. Got ahead of myself there. So does this mean that we're not going to look at shorter time frames? No, doesn't mean that at all. We are going to look at some shorter time frames, and we can set those up. In fact, any of these can be set up to be a shorter time frame. For instance, we could easily do this. Okay, that's saved as that. So let's just say we want to create another profile. Let's see. One moment. I like to keep the profile names consistent. Okay, we want to name that candlesticks, but we want to make it candlesticks and then call it candlesticks intraday. So that's what I want to do. Save EURUSD candlesticks intraday and put it as 1. Okay, intraday 1, because most likely we'll have more than one particular type of candlestick chart. And we save that profile. Go back over here. Okay, I didn't save this particular one from the last time. That was our monthly. That was my fault. So go back to the monthly and expand it. Okay. You can always hide it behind there if you wanted to. Or you can do something standard and then just go through and you're all set there. So we want to save that. And we're overriding the old one, basically. Yeah, we want to override it. So profiles, and let's go down to our candlesticks intraday. There we go. And here, all we have to do is change some time frames. So let's say we wanted to look at a 5-minute chart here, and a 15-minute chart there. Have to have an hourly chart everywhere. 4 hours. And down here, we're going to go with daily. Okay. So there we have that. Okay, so go back over here to profiles. Let's save as Euro dollar US dollar candlesticks intraday 1. And save that. Already exists. Okay, so now let's go back to our standard as we were looking at over here. Euro dollar US dollar candlesticks 1. And make sure it's set up. Yes, it's set up correctly. Okay, so now we've got a couple of different ways that we can work. I hadn't really put the ATR, the average true range, down here on this chart as we had in some of the others, because we weren't necessarily looking for the range of the month in particular, but we can always add that at any time we want. So our next thing that we're going to do is we're actually going to enter an additional trade. We're not going to do that now, so we're not going to make a trade example. What we're going to do is we are going to wait until Monday, and this is Friday, and it is about 4:12 p.m. Eastern Standard Time in the United States, and we're going to let the market do its thing, and we're going to come back on a fresh session and jump right into more trade examples. We're going to run into more indicators. You're going to be introduced into more indicators. We're going to talk more about trading without indicators, so there's tons of possibilities here. And basically, your objective is to learn to control risk, which is what you've seen in this particular example. And there's probably no one that's jumping up and down about making $125 for certain. But that's $125 that was made basically in one day on a $5,000 account while controlling our risk. And our risk was $233 at the time. So we've done a good job of getting into a profitable trade. We've managed that trade by managing our risks, and we've exited that trade. And in this particular case, we've exited the trade at a profit. Not all trades will be profitable. Let's not get disillusioned about that. Losses are a natural part of trading, and learning how to deal with them emotionally, psychologically, is extremely important, because all through life we're basically taught to have everything be perfect. In trading, things can be very profitable for you without them being perfect. Sometimes pretty far from perfect, actually. So trying to get 100% winners, I don't want to discourage anyone from that particular goal. Well, yes, I do, because it's a goal that doesn't make any sense. Most of the time when someone's looking for a high percentage of winners, it is because they are nervous about having losses. One reason that new traders are nervous about having losses is because the risk is not being controlled. For instance, in our previous trade, had we been trading a standard lot of $10 per pip, then risking that 233 pips times 10 would have been a big chunk of our initial equity. But by scaling it down and risking a small percentage of our account equity, we placed ourselves in a position to trade in a much more relaxed fashion. $233, if it had turned out to be a loser, it's not the end of the world. $2,330, it turned out to be a loser. Well, how many more times can we have a losing trade of that type? Well, one more time, and then we're no longer trading Forex. I hope that that makes sense. And I know I emphasize risk control, risk control, risk control, discipline, discipline, discipline. And I sound like a broken record, and that's good because everyone else that you come into contact with in the Forex arena should be telling you the same thing. Control your risk. So this is what we've done, and we've ended up with a successful trade at this particular point in time. This one is a profitable trade, and we're going to look, as I said before, at a lot more exciting live examples, so you can see it where the rubber meets the road. I'll be placing the new orders here, and we'll just be chugging along. So I look forward to seeing you in the next module, where we're going to look for an entry point for our very next trade. Thank you very much.